What are the latest and greatest sectors to move into is the topic today. I have my great friend and colleague Kate Stalter with me today. We are recording this in full disclosure on a Sunday, hence my Sunday outfit with the hoodie. I would not be wearing that during the week. Kate, how are you doing this morning?
I'm doing great. Great to talk to you on a weekend, Serge. This is a lot of fun.
It is fun and I think important, and we're going to get right to it here. I will be sharing my screen here in just a second for those people that are on YouTube out there watching this. And for those people watching on the traditional podcast channels, as always, you will not miss a thing. We will be discussing and explaining what we show here throughout the next 15, 20 minutes or so in this special podcast. But Kate, before we go anywhere, I want to just quickly mention to people that you and I are holding a very special session next week. When I say special, it's timely in terms of where we are in the broader market, and more specifically, where we are as it relates to different sectors and groups and asset classes this year. We've had a really sharp rally in the equity market. And let me just pass it to you just for a second. Where do you think we are right now, broadly speaking, in terms of the economic cycle? Because that very closely ties into what sectors, groups, asset classes we want to roll it into. We will talk about Bitcoin. We did buy the IBIT a while back. Just quickly in a nutshell, what do you think here?
Yeah. And what you're alluding to here, Serge, is just as we're in a bull market or in an economic expansion, you do go through different cycles, right? There's a whole lot of exuberance early on, and then it maybe slows down a little bit, but is continuing to expand. Right now, we're in maybe a late stage of the expansion. Wouldn't you say? Wouldn't you call it that right now? And then maybe you see some different types of sectors that do rotate into strength. Early on, it's usually something that's a traditional growth sector like technology, for example. And we have certainly seen that. But right now, we're seeing some other things. I think we can maybe show some examples here. We've got energy, maybe healthcare, maybe some other sectors as a later stage expansion. Would you agree?
I fully agree. And of course, it's important. I agree because we manage these portfolios together. But I think what's important, maybe just before, and this is a great intro, so thank you for that. Because if we can agree that we're in an expansion phase, but maybe late cycle, and we'll talk about that, we can from that take it a step back first. The business cycle, right? And we're going to go into great detail on this week on Wednesday. I think we're going to start off. So this week, basically, might give people a couple chances to listen to this, but we need to understand the business cycle. And I think too often people get either scared or too greedy or too excited, I should say, about the equity market or any parts of the equity market or the bond market more or less at the wrong time, and it hurts their performance. So I think if a lot of people just understood that there's a cycle, everything is cyclical or at least secular, and the business cycle is very much something we can follow, people would have a lot easier time to understand. For example, right now, again, we might be late cycle, and I have a chart on that I can show people in just a second, but there are things that are picking up steam, and they may not pick up steam for a very long period of time, but they are picking up steam because interest rates have come down a little bit. People are excited about the late expansion phase. It's sometimes it's at the margin where these things happen. But what we definitely don't want to do is be in the completely wrong sector at the completely wrong time, which I think is a great starting point for this whole discussion, actually.
Yeah, it's interesting because as you're speaking, what occurred to me is the things, the investments, the sectors, the industries that maybe went gangbusters a few months ago during part of the market uptrend or the economic expansion. As you're saying, at the margins, you may see some different ones that are going to be better investment opportunities at this stage. And that's what we're always looking for.
And it's a constantly moving game. Now, I think one thing also that we're going to talk about this again, everything we're going to talk about, we're just touching on right now for a few minutes. We're going to go into much more detail this week. So just do make sure you join us there. You can sign up for that free presentation down below, or maybe it's on the next screen. I'm not quite sure where you'll see this on this page when you watch this. But the business cycle is ever changing, but there's also or ever cycling, but there's also subsectors within. For example, right now, let's just talk about the hot topic du jour, which we are participating in. We did get long IBIT. We actually got long some other Bitcoin related ETFs in Q4 last year. you and I. But you look at something like technology, or excuse me, like Bitcoin. Let me just quickly, and I'll show this. What the hell? Just to quickly show people a little bit of what we're looking at here. This is what it looks like right now. I'm pulling up a chart here for people that are not seeing this. It basically, we have essentially Bitcoin at the top of the chart here, and we have a Bitcoin versus the S&P 500. One question that people always ask me is, how the hell do you know when to rotate into these things and when not? There's a two-step process, and again, we'll talk about this two-step process in great detail this week. One of them is understanding where we are in the business cycle, as you just said. The other one has to do with relative strength and relative weakness, which takes work, right? When you look at something like this, and that just relentless relative strength of Bitcoin versus even the S&P 500, which is very strong, that's a very clear sign to get long, right? I don't know if you have a couple of words on that, because that's exactly what we did, and we are still long this.
Yeah, exactly. And this kind of, again, goes back to the point of where are we in the cycle? Where are institutional investors jumping into these things? We're watching any number of indicators. Those are just two of them. But it's exactly right. Sure, is the S&P doing great? And are you going to make money there? Absolutely. But is there a way that you can even generate more return by zeroing in on what some of the better performing industries, asset classes are right now?
And what's interesting, what you said right there is it's right, it's at the margin, meaning this does not mean that we have to dump every other stock or sector or asset class we're allocated in. Like professional investors, particularly, they will just overweight, let's say in this case, IBIT maybe, or underweight something if it's not doing well. We have the luxury, of course, to literally just sell it or buy it and be all in or all out if we want to be, which is good as well. Speaking of institutional investor, and as we're talking about Bitcoin here and IBIT, and I do want to warn people, like this week in this market presentation that you, Kate, and I are going to do, it's not all about Bitcoin, just in case anyone's concerned. We will talk about it because it is a hot topic and we're long, and we think there's still an opportunity there. But talking about institutional investors, give us a couple of viewpoints here, what you think about ETFs, and as it relates to those new six or was it 10 or 11 ETFs? I can't remember how many of those Bitcoin ETFs. When you see all those ETF flows, and I know you're an expert there on ETFs, what's your basic thought right now through the lens of, say, the next 3 months, right? That's a very near term view, but just give us some basic thoughts here so people get their head around what we're going to talk about this week.
Yeah, exactly. And to come back to the beginning part of your question about the institutional investors, one of the things that the big investors do, and Serge, all these guys, you've worked on that side of things. I've been tracking this for many years. They're researching very carefully down to the most minute detail of where other inflows are coming in, looking at the economics of a situation, using Bitcoin as an example here. And you just alluded to this. Recently, all these spot Bitcoin ETFs launched. And now we are seeing the inflows are coming into this. And Serge, you were very cautious about this all along. You were saying, let's give these a minute to make sure we're seeing the inflows here. And we didn't go by all the market chatter about everybody. If any of you do follow crypto at all, that there's always all kinds of over exuberance about this. It lends itself to that. We took actually a very conservative approach to this, waiting to see, was the money actually flowing in? Did the technical indicators show us that the time was right? Did the institutional buying with all these brand new spot Bitcoin ETFs, did it seem that in fact they were being bought? And those were some of the signals that we used to make our decision about this. And that's how we approach everything. Serge is right. We're not all about crypto. This is an example we're using today because it is something that's in the news, that is a position that we're holding right now. But we use that same approach to every single ETF that we purchase.
Yeah. And You mentioned something really important right there as well. You use the word ETF, right? And so what I want to talk about a little bit right now is opportunities in the market. This is one opportunity we're liking right now. We do think energy, and we will again touch on this a lot this week in our market call. Again, if you just tuning in here, make sure you sign up for that. It's completely open for everyone to listen to. We're going to go through the whole set, all the sectors, different asset classes, see where we find opportunities and how this works, or at least how we do it. I want to talk a little bit about leverage as well, because one of the things that we actually recently just started doing a few months ago, I think it was, we started also giving people that do the sector rotation with us ideas with options. And there's even ways of doing it with futures. Now, of course, there has to be a futures contract based on what we're buying. For example, if we're long, like we're long energy right now, I think we can be open about that's one of the positions we have long. Like if one wanted to use futures for that, one could literally go long oil futures on that. But again, it's about the cyclicality. But maybe talk a little bit to the options part of it. I don't want to cover it all right now because we'll talk about that this week. But just the options part of it, how we do that, and how that ties into the whole process.
Yeah, and what we've been doing recently is some of these trades is using a bull call spread, okay? And we like to go out a little bit in the distance. I think Serge, you always make the really good point that if you're looking too close, if you're buying these calls that are like or selling these calls that are like 2 weeks out or something, that's when people can get burned, isn't it?
They can, and actually just quickly at while I answer that question, also just quickly give people a bit of an idea of the energy sector. Again, that's what we're talking about. That yeah, typically speaking, when we use options, we don't want to use very short dated options. Now, with our clients, when we give them ideas on sector and group rotation, we typically focus on the underlying. In this case, I'm just displaying right now a chart of the energy sector, which is looking more and more bullish. There's inflationary expectations. Again, the price of oil is moving up. So we try not to use options that expire like within the next couple of weeks, because if it goes against us, it typically leads to a loss very quickly, as opposed to if we use options that expire, 50, 60, 70 days out, hold the trade for a few weeks, the options are less sensitive to the move. Now, of course, that means you make less money, but we also have a less of a probability of having a really bad trade. And then, of course, the idea comes along. Some people like to buy options, some people like to sell options. One can all, if we buy energy like right now, one can buy a bull call spread in this case. One could do an options credit spread, like a bull put spread. And again, if it's a futures trade, one could even buy all the futures if that kind of makes sense, right? But I think the underlying rotation is important. So let's talk a little bit more. So we've talked about two things we like right now. And again, we'll talk about a lot more here this week, and more importantly, how this process works, how we can use it as a hedge, how we can lever the whole thing. So we're liking energy right now. We're thinking maybe that we're in the late stages of the expansionary phase. And so one thing, and we haven't, as of you and I recording this on Sunday, we haven't actually done it yet, but healthcare is quite interesting. And I just want to quickly share this with people as well. The healthcare sector is one of those sectors that's done very well percentage wise, but it's broken out. And where we are in the cycle here, it actually has a better probability of doing well going forward than a lot of the technology stocks. What are your thoughts on this?
Yeah, this is a really interesting sector because it has both growth and defensive elements to it. And you can't say that about most sectors, but this one, there's a ton of innovation going on. Biotech, medical devices. It's really funny. Just
Yeah.
a personal note. I was on a call with a friend this morning, and he was talking about being treated for sleep apnea. And there's now devices that are coming along. Publicly traded companies make these devices that you don't have to wear that whole mask and the whole CPAP machine anymore. So there's a really fast pace of innovation.
Yeah.
Biotech is a whole other area with really fast pace of innovation.
Yeah.
But the defensive part of healthcare, and I think this lends to growth in various market cycles, that's where I'm going with this, is generally speaking, people are still going to go to the doctor, they're still going to buy their meds, they're still going to pay for healthcare treatment, even if the economy turns south. So this is a
Yeah.
really interesting sector that it's not surprising to me that it is showing strength at this point in the cycle.
Yeah. Makes a lot of sense. Speaking of biotech, I think we can also be honest about the fact that we do biotech and we're actually long biotech here as well. Maybe a last point here, and again, folks, if you're just watching this right now, we're holding a much more a deep dive conversation about sector and group rotation and what our process is, how we can use that to potentially enhance returns, but also to hedge a portfolio. One can leverage these trades, right? It can be done with ETFs, it can be done with equities, it can be done with futures. The most important thing is that we get the sector actually right. That's really the point of the conversation, and that's what we're going to talk about this week. One thing that, just from a cyclical perspective, where we are in the market cycle, late expansion phase, that's our view. Technology here, and I'm talking about technology as an asset class. There's obviously, it's a big asset class, right? And there's AI. All else being equal, it should start to maybe even relatively underperform going forward. That's not to say that anyone should go out there and start shorting technology stocks, but from a market cycle perspective, where we are right now, and we had the AI revolution, which has distorted things. To be fair, but there's a lot of opportunity there. There's still within pockets of that, but as a sector, it might not be a bad idea to cut back some of that. In fact, we even have an inverse ETF there as a hedge. Like, I can say that
Mhm.
as well.
Yeah, it's because in any kind of fast growth sector, that's the kind of place where you're going to see at some point investors, the institutional investors, once again, are going to start taking some profits. And doesn't mean that anybody's giving up on AI. We still very much believe that AI is going to be a growth theme going forward for the next several years now. But it is going to ebb and flow in terms of investment. We actually did see that a little bit there in the fourth quarter, third and fourth quarter in the autumn, really, of 2023. We saw that a little bit where investors were starting to take some profits and were saying to some of these AI companies, hey, I want to see that you have actual revenue from AI, not
Yeah.
just that you're talking about it in your quarterly conference call. So yeah, it's again, this just comes back to the whole thing we're talking about here, Serge, the overarching theme of what is performing better than other asset classes at any given time.
And what's worse, right?
Yeah.
Or excuse me, or what is starting to show relative weakness. And again, given where we are in the economic cycle, and one thing we'll talk about, we can probably rest on this. It's not just about what happens from sector to sector, right? That's an equity story. Although the equity story can be used to play other asset class rotation as well. But it's really about, we can also expand this into asset class rotation. When is it time to move more into, bonds like TLT, or when is it time to move out
Mhm.
of that, or commodities, right? In and out, or in this case, we talk about Bitcoin, right? So there's a lot of different ways in which we can, which we can take advantage of this kind of rotation. So really, that's what I wanted to go through together here. Again, we're recording this here on Sunday morning, but we're really looking forward to next week, that having a much more deep dive discussion about how what the concept of sector and group rotation is, how it can benefit portfolios, how it can help growth, how we can hedge, how it can be done with equities, ETFs, futures, and how it might be something that could be incorporated by an individual investor, a self-directed investor, certainly by institutional investors. You and I both work together also at Blue Marlin Advisors, an investment advisory firm where we practice this. Before I let you go, Kit, any last thoughts of why people should join us next week?
A lot of the ETF sectors, asset classes that we're looking at, they're unusual. And that kind of strikes me a lot, that not only, and I'll just allude to this a little bit here, not only are we long energy right now, I'm going to use a terrible pun, we've drilled down to a very specific sliver of
Yeah,
energy. And this is the kind of thing we research. We've got a few things in here that are a little bit obscure. And again, it's honing it down to figure out where is the best place on the margin that we can eke out a little bit of a better return, or perhaps a much better return in some
yeah,
cases.
yeah, yeah, absolutely. Or if it's even in a hedge, that could be as
Yep.
well. So we'll
Yep.
talk
And
about that.
mitigating risk. We'll talk about that a little bit. That's not as exciting a topic to people
Yeah.
sometimes, but it's very important.
Yeah, it's certainly something worth considering very seriously. Well,
Mhm.
listen, Kate, this is great. So thank you so much for taking time Sunday morning. For all of you guys that are listening, again, you can join us in next week's discussion. wherever it is on the page or down below, or an email you received, I don't know. But you can join us for that special market call about sector and group rotation. And we look forward to seeing you there. Thank you, Kate. Have
All
a
right.
great
Thanks,
rest of your
Serge.
day.
You too.